Is the 21st of November, and it's great to have you on board, of course, as our trading buddies. Happy new week to you. Second last week of November? Yeah, I think so. You know what that means? Here comes Santa Claus. I got it right, Sam. Thanks for that. I don't think we'll talk too much about Santa Claus just yet. Instead, I think what we will do is go and have a look at some trading screens, shall we? Or some charts. We will, of course, as always, start with pound versus the US dollar and see if we can make a trade appear. Thank you, Paul P. I'm sure they will be. Bright, merry. I'll be working on the merry bit, but not sure about the bright. Okay, let's see what sort of range we've got today. 1, 2, 3. So the range begins there at that bar, and it ends currently at that bar, the red bar, because I think that's lower than that. The current low is 118075 on that one, 118072, barely, but we'll call it 1.1807, shall we not? So that'll be the bottom of the range. Top of the range will be 1.1869. It's pretty much what I've got there. We'll just correct that so we know what we're doing. 1.1807 and 1.1869. How was your weekend, guys? All good? Most of the team, certainly the IFP team, were very busy. As I understand, another 3 days of sharing all about currency. Well, all about trading. Hope that all went well for you guys. And I think we have a few more people on board in the ACW family as a result of that. So that's fantastic, as always. I don't see the clock. Where's the clock? It's gone. About 2 minutes to go. All right. I will set this up as a center mark. That's what we need. So 1807 to 1869, even I can work that out at 62. So 31 above 1807 will be 1.1838, which is pretty much bang on there. And that's okay. So we will look to trade this long. And as always, on the test system, it will be at very, 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 very low risk. And our entry is going to be 1.1838. 1.1838. Our stop loss is going to be, at the moment, 1.1817. Sorry, 07. And the take profit, therefore, will be 2.5 times 37. Tests me every time, doesn't it? 37 times 2 is 74. And let's go with 18. So 92 pips we can put in there, 92. And our TP1, which, as I always say, is a bit of a misnomer because we won't be taking profit at that point. We will be moving our stops to entry, however, 1.1869. Stops to entry, nothing off the table. Looking for 2.5 to 1. All right, we are 30 seconds away from this candle closing and therefore putting this trade in the market. I'll update. Well, it's only one thing to update as far as trades are concerned for me, and that is Euro Kiwi, which did hit TP1 on Friday. I am pleased to say. Haven't taken any profit on that, but stops are at entry, similar to this one, really, at the end of the day. Similar trade management. Righto, there we go. New candle, and it is a buy order today. Happy days. So entry 1.1838, stop loss 1.1807, stops to entry 1.1869, take profit at 1.1930. That's all she wrote as far as that one's concerned. Let's turn our attention to trade updates. That was the trade that we took on, was it Tuesday? I think it was Tuesday, but we traded last Wednesday's, but well, sorry, it was then last Wednesday, the bar, and put our entry under there, which is where our stops are now, stops up there. And we have hit TP1 barely, which was just above the high, the low of that bar there. So barely hit it on Friday, and looking now for some follow through. The reason I didn't take any profit is I think this has got good prospects to come back to the bottom of that broadening pattern, which is why I've taken the trade. Not only because of that, but because if you have a look at the daily chart, we do have a double top on the bottom side, if you like, of that high mark of the broadening pattern. And since then, we've broken the neckline. We've retested the neckline, which is pretty much the bar that we traded, the neckline being there, if you like. And now we've got a lower high. What we really don't have yet is a lower low. So still a little bit of question mark over that one as to whether it can get through the bottom of that range. But if it does, I think we're in pretty good shape. Okay, nothing else on that front. I did place an order this morning, for those of you who are interested, on CAD Swissy. Now, this is kind of a premature, maybe premature, not sure. We'll see. Really, I'm trading anti or completely contrarian to what the game change is telling me. Game change is telling me to go long here on the weekly bar. Yet I see things completely different to that. What I see is the range, of course, the box range, the bottom of which has been broken by that big sell-off on first week of the month. Wasn't CPI, must have been FOMC. Yeah, FOMC drove that down. And since then, on the weekly chart, we've had a retest last week of not only that trade line, but the bottom of the range. Now, to me, that suggests if price was to go back to that level, it would continue to go south. That said, we do have a formation of a double top, even a head and shoulders, if you want, neckline of which was broken and retested with this bar and has sent that currency pair to the south side. And that all adds up to me to be a potential for A, B, C down here somewhere. Now, that said, I can also see a setup long as a false break of this level. So we've broken the level, and that's the bottom of the range, don't forget, but it's also that trend line or trade line. We've consolidated, we've come back above it, and we've retested it. So I've got two trains of thought. One is that we will rally here to where? Great question. I don't see the obvious level of resistance until we get probably in this vicinity, and that would be okay. My consternation, if you like, is that I'm tempted to play that long. And again, that's based on going back into the range. But if I really have a look at the big boss here, it's tough to go long. It really is tough to go long. Everything's pointing down here. The range that we've been in for quite some time. In fact, the range began with that massive decoupling of euro to the Swissy. This is CAD Swissy, right? But that candle there that you're looking at on the monthly chart was January 2015. And if you were trading in that time, you'll never forget it, because when the euro decoupled from the Swissy, it sent the market into absolute crash mode. And the euro Swissy chart, if you want to look at it on that date, will indicate that that was a massive, massive day in the world of currency trading. Since then, we've been in that range, as I say. This big tweezer top sitting here, I can't get out of my head, and it really suggests to me that we're probably going down and having a look at these lows of 2019. Yes, it's been a while, but there is a pretty clear, to my mind, reversal scenario sitting there. So back to the bottom of the range. So that's pretty much why I'm playing this short at the moment, with the anticipation that it could well go long. And if it does go long, maybe to the monthly pivot, we'll just get a better price going short. I'm not sure I want to trade it long at the moment. I'd much rather see a higher low before I did that. So just sticking on that principle. Hello, Swee. You're waiting so long on this. Yeah, look, I get it. I totally get it. If price travels to WS1 and bounces, I felt it is at the bottom of the 10. I 100% agree. It's there. It's totally there. That channel there you're talking about, I guess. Gee, it's a big channel. Yeah, okay, I get it. This one here, it's a little bit skew. If I actually tried to draw that channel and I wasn't happy with it, so I just dismissed it. But I see what you're saying, and I totally agree with you. I think maybe short term there is a buy in there, but I also think that the weekly scenario is worth my attention. And really it's based on, and Swee, you'll know it's one of my mantras, if X doesn't happen, in other words, if that long doesn't come off, then I completely expect that Y will, which will mean we're going down. Thank you, Sam. Much appreciated. Righto, so that's CAD Swiss. It's hard to say it's my trade of the week, but it's probably the chart of the week, I would think. Also looking at Aussie CAD pretty seriously. And the reason I'm looking at Aussie CAD is, well, twofold, really. We need to look at this horizontal level here, which is pretty key. It's pretty strong. And if you follow it way back across here, okay. But on the weekly chart, I think it's much stronger than it appears here on the monthly. But the reason I'm keen to trade this now is because we've got a green bodied bar that stopped bang on that level, which is about 89.20, something like that. So I think in terms of same thing, if X doesn't happen, Y will. So if the bulls don't take over here, then the bears will. And I think they can pull this back to probably here over time. May take a while, but I think they can pull it back to that 87.50 mark, something like that. So I'm watching that, but I'd much prefer to see on a daily chart price come off something as a lower high. So same applies as always. Once I see that potential reverse, I'm looking for a lower high in here. I don't even think today, if that bar was to repeat itself, repeat itself, if it were to remain as is, I don't know that I'd be interested, but it does look to me as though there's a little bit of downside in Aussie CAD at the moment. And I guess that plays in the opposite direction of CAD Swiss. So I'm going CAD strength one and CAD weakness the other. It's kind of a little bit confusing, and that's why I haven't traded Aussie CAD. I've got to say I'll need to wait for setup. I think looking at the dollar index is probably fruitful today, and from the outset I thought this was probably going to come and test this level, retest this level 109.38. If that were the case, and it does look to be on, and certainly the candle that was produced last week suggests some buying will occur today or this week, and I'm fully on board with that. As usual, I want to see a higher low in here before I trade it, but it does look to be a pretty strong case in my mind that price will come back and retest that level. We shall see. Of course, that does wonderful things for things like the Aussie versus the dollar, which again is on my watch list, not least because it is a game changer. Weekly game changer suggesting, and this is very similar to Aussie CAD that I've just pointed out, weekly bar suggesting that we do go short here. If you think that's a good idea, you probably haven't got a lot of time left if it is going to work out to actually get into that. I haven't taken the trade, and I'm not sure why, to be fair. I think it is the right direction to take. It is underneath this resistance level, and it does look to be headed back down to a support level, which I've got marked as this level here. I've got no idea why, to be honest. Maybe on a daily chart it looks good. Yeah, it's been a bit of resistance here and a bit of support here. So it's recency that I'm looking at in terms of that support level. It's also the monthly pivot. I don't know that we'll get down there before the end of the month, but who knows? So I think pretty much everything against the dollar at the moment is tradable. And that takes me over to the indices. I think the one exception is the S&P 500. And the S&P 500 looks very much to me like it's broken this horizontal level, come back and retested it at the weekly pivot level last week. So I think that's potentially a long here. How much is in it? I'm not 100% sure of that, of course, but it does look to me as though we've got a sequence of double bottom, or if you even go out to the weekly chart, you're probably going to see that, not so much. Daily is probably the most convincing of the two. I can see a double bottom here, higher high, higher low, higher high. Is this the higher low? Potentially, yes, it is. Not sure why I haven't taken that position either, to be fair. And guess what? It's the third Monday of the month, suggesting that, is that a 90%? I think it's a 90% or something like that, that you do go long here.
It's high, mate.
So,
I don't know. I'm not
hello,
sure what the
bud.
statistics. Hello, mate. So I'm not sure what the statistics have been recently on that. It got a little bit skewy, but it was 95% when we looked at it a couple of years ago.
And aren't we smart? Never traded it. Why would you trade something that goes 95%? It's just crazy.
Yeah. As I say, mate, it's changed a bit. I think certainly this year. I think it would have been it was a struggle. It'd be interesting to know what the statistics are this year. But it does suggest that if it goes back, it reverts back to the mean, then next year or the following year is going to be a stellar year, probably, where 95% and beyond is probably on.
Okay, so you're saying wait for the US Open. Is that the way it works? You don't go from open of market, you go from open of US. Okay. Well, look, there is a technical reason to take that, I believe, today. And maybe I should try for the first time at a very small risk. Actually, I might be up to, because I've got to prepare a presentation for next Tuesday. Oh, ouch. I better get to work on that.
Mine's Saturday, mate. I'm still kind of in the skeleton phase of mine as well.
Yeah, I've got some ideas, but there's nothing on paper yet, sadly.
No.
Well, there's a few things. I've got dot points. There's 3.
Same.
Yeah.
I've just got loads of data to go through. That's my problem. I kind of know what I'm doing, but I've just had no time to go through the data. And it's probably no bad thing because it'll be really fresh. But I fly out on Thursday. I've only got a couple of days, really. Yeah,
you think you can do the work on the plane? Never works.
No, mate. I'm not doing that. Yeah. Sally said, why don't you do it on the plane? So there's no room. You can't really sort of like spread out. Can't have all your screens there. You can't just lift for information. I find laptops very difficult to do certain work on, to do anything really deep on it, deep dives and stuff. I just don't see them working out at all.
I bought one of those, actually. Was it Singapore? No, it was Singapore. I don't know. Last time I was in Singapore doing some trading, something or other. Can't remember what. And I bought one of those flip over things when they just first came out, the Lenovo, whatever it's called. I've still got it sitting here in front of me, as a matter of fact. So you can turn it inside out and upside down and all the rest of it. I thought that'd be perfect because you can just sit it on your dinner table and go, away you go. You don't have to, screen up here and all the rest of it. Yeah. And never used it once.
No. I mean, that's just good advertising, isn't it? It makes you think you need it and you want it, but actually when it comes to functionality, it's just not what you think. I'm used to big lots of screen equity. You know, I've cut down my screens now. I've only got 2, but one of them is a hyper wide screen to kind of account for 3. You know, so there's 3 there and there's 1 there. So I've got 4 really now set up, which is what I've always had. But I like sort of seeing things nice and big, moving windows around so I can pull from this point and put into that point. Laptops just don't do, and I've got a laptop as well, which I'm talking to you at. Incidentally, my internet all of a sudden fixed, so we should be all right.
It's a miracle.
Yeah. It seems to take longer. I think I need a new router, but it just seems to take longer to fire up. But it's all right when it's there. So I don't need to get anything yet. But yeah, I don't do the laptop work thing very well, mate. I'm with you on that.
Oh, well, most of my work's done on a laptop. But now, actually, I've only just in the last 12 months gone back to a desktop. But I've got one of those. It's like a faux Mac, where everything's built into the monitor, basically.
Oh, I see. Yeah, like the iMac.
Yeah, I've got one of those that sits in a. I haven't used my iMac for God knows how long. It just sits in a box under there because it's too hard. Can't work it out.
Yeah, I think having a good system's. You know what? I had a man build me a system about 12 years ago when I started trading for this American company, and it was brilliant, bulletproof, lasted me 10 years. I got this one about a year ago, and it froze on the weekend. It just couldn't handle what I threw at it, and having sort of something that is, and this one was, you know, it was another pricey one. I made sure I got high spec on everything, but it just, I don't know, having something bespoke made by the right person, it makes a big difference. Anyway, mate, let's talk markets rather than laptops and computers.
Yeah, okay. Well, it's nice to catch up on all the technical things that I know nothing about. So.
It is. I'm with you on the S&P. In fact, I'm not with you on the S&P. I think that there's a shortcoming, but I do think there's a potential long. The FTSE this morning has started a bit weak, and I looked at it, and I did initially take a short, but I've closed it, and I'll show you why if you're done with your stuff.
I'll just for 10 seconds it'll take. And
no
like
worries.
I said, this is the exception to the rule. And the rule today for me is dollar strength for the early part of the week, certainly, and maybe all week. But this is the exception. Everything else is pointing in the opposite direction. NASDAQ's pointing south, silver's pointing south, gold is pointing south. For me anyway, because they're all game changer bars. Too late to get into that one, of course, but as I said, the S&P is the only one on my indices list that is suggesting that we go long. And like I said, I think it's only a short-term play anyway. Only up to here, but you know, maybe today then look for shorts. I don't know. I'll think about it. But yeah, please convince me.
Yeah, mate. Well, do you know what? I think we're in for a bit of a tricky ride, and I might be completely off kilt with this, but this is just the way I'm thinking. I'm wondering whether there are actually any decent opportunities. But you know, if we look at the FTSE first of all, I did take a short here off this weekly pivot, but my problem is this gap, and for that reason, I decided to close the trade, to be honest, my target's my target's down here, and it might well get there. So maybe it was the wrong decision to close the trade, but I don't like that gap, and I didn't like the fact that it was sitting at the daily pivot. It did react off this trend line. In fact, it didn't even react off that trend line. So it does show how negative it is. So I'd like to see the FTSE up a little bit before I went out and out short on it. The Nasdaq's the same. I look at the NASDAQ and I'd like to see, not there, I don't mind that one at all, but along here, I'd like to see this come and test the weekly pivot along that trend line before I go short. You know, I'd like a short on the NASDAQ. I would like a short on the FTSE, but I just wonder whether we might get thrown around a little bit, even though it looks pretty bearish right now, which is fine. I don't mind missing opportunities if they just. In fact, I don't mind missing opportunities if I'm out of the market and they do something that I wasn't quite expecting. So I thought we might get a push up first with the FTSE and the fact that I'm now not in the trade. it's not all that frustrating because that gap would still bother me. It still would suggest that we might push up at some point. And really, it's the Nasdaq I'm interested in. I'd really like to take this one on short, and maybe hedge it against the FTSE. I wouldn't.
Okay.
I couldn't agree with you more about the dollar. The fundamentals from what I can see, and the COT data, both suggest that the US is still in pretty rude health. It's doing okay, and we had some retail numbers last week that I think spooked the market because they were quite strong. So the consumer still looks like it's in pretty good space. Unemployment data still looks all right. The fact that that CPI has come down a couple of percentage points is irrelevant in my opinion, because it's still so high that that coming down a couple of percent, in fact 0.5 percentage points or whatever from the 8 region down in the 7.5 region, I don't see how that is particularly relevant for some dollar weakness. We've had hawkish comments from the Federal Reserve speakers as well, which also should prompt the buying with the dollar. But the overall look of the US economy is still pretty good. When you sort of look around the grounds, it's still pretty good. So
they had good retail figures last week, didn't they?
Yeah, they had some decent retail figures, mate. Yeah, and it looks to me like this is a buying opportunity, in the dollar index. So if you consider what we've got here, we've got this range that has now been broken through, and if price comes back, that's going to suggest a long, and you can see that on the euro.
Yep.
Which price comes back to somewhere around about there on the euro. Looks like it's a short. Looking at the potential target back on the dollar index, this is the big pattern here that from what I can see, and this is it looks like it's something like this might be where we can start to kind of form the potential measured moves on this outside the pattern. It's somewhere around about here, and what I find quite interesting with this is that if this is the range of the pattern, we've seen it. We've seen the range of the pattern now satisfied. So this has got a green light to get back inside here and go. Yes, it could come back down again, but it has got a green light to go, because that's probably been the pattern's probably been satisfied to the downside. So I think the dollar index is a little bit tricky in some respects, but from here to here, I'm a bull. I'd be all over this to the long side, which would mean that gold is a sell, probably into this area here, at least down to this area here, around about 1722, and maybe below. It would start to look like a potential inverted head and shoulders, probably maybe not on this particular time frame. It might be a little bit wide, but you're looking there, and that means you're looking around about there. So this would look like a potential inverted head and shoulders. I'd be okay with that, because that gives us a while to get some data points. This is a daily chart here, so that would suggest that the inverted head and shoulders is going to be looking into we're looking into December before this one would suggest that it could bottom out the same point here.
A bit like probably, a wall of worry, do you think?
Yeah, I mean, to be honest, when it comes down to the sentiment cycle, you're much more equipped to analyze it in those terms. So I'd have to go back and refer to the picture before I give it labels that I don't fully understand at this stage.
Yeah, I'm perfect, but it's not too dusty either.
Yeah. I mean, it could be, couldn't it? We could start to see this push higher again. But I just don't know. I'm not convinced that the Fed are done. I mean, we know the Fed probably aren't done. The question is, are they done in relative terms? Are we sort of finished on the
how far are they going to go? Yep.
Yeah, and does that change the price of stuff? Does that make gold relatively cheap here? That's what we've now got to calculate. Not whether the dollar's going to, not whether the Fed are going to go, but does the value of how high they go, become baked in because things start to level off a bit? It could do, But that would suggest that, you know, we're still seeing some. I still think the Nasdaq is overvalued. You know, if we look at the price action over the long term, yes, it's come down a lot, but it was probably quite overvalued when we hit the COVID highs. And since then, we've had some removal of liquidity. So that would suggest that the Nasdaq's still probably overvalued here and could come down another 10 or so %. So looking for shorts in the Nasdaq, potentially figuring out what's going on with gold and figuring out what's going on with the dollar as well. The trade call of the week was the Kiwi yen, but with some caution, because if you look at the Kiwi yen, long that was, if you look at the Kiwi yen, we are close to resistance up here. And that's you know, that may well, I don't know whether it might just sit up there and nest, or it could do. We're close to resistance there. We've got an interest rate decision this week, which is probably going to be 75 basis points. But if it isn't, the Kiwi's going to reverse. But if it is, and the press conference remains hawkish, it could push into that level. But I'll tell you what's starting to get my interest, mate. That the Japan is got inflation numbers now pushing to 3.6. And of course, that would be enviable in every other country. But if we're talking about the 2% target, we're getting near double, you know, and what the BOJ want to see is inflation staying above the level for a period. So they may not move straight away, but we've got some inflation data from them this week. And if that inflation data continues to push higher, I wonder whether the assumption now that the yen is a good value could start to change. So, as I say, Kiwi yen long is the call, but with some caution, because of how deeply sold off the yen has been and how their economic picture looks like it's changing.
And on the other side, the Kiwi's been strong too, so it's a little bit overbought. So I get that. That kind of makes sense.
Yeah, and also off the back of that, I might just switch it off for a minute. Yeah. Also off the back of that, what tends to happen, or what can happen after a rate decision, is that the currency actually fades because of the potential for that to be the high of this particular cycle. So there's a few dangers involved in the Kiwi yen. The fundamental data does push us there. The COT data does just about push us there, and the seasonals definitely push us there. So, you know, the bias is for a long, but I wonder whether that might start to change. And we've got to put in a little bit of discretion here and say, okay, I don't mind taking the long, but this may well be as high as this goes. And if it gets that level, let's take quite a bit off the table and leave the rest to go through, fine. But let's make the trade safe at that point. That would be the way that I'd be playing it.
Sounds good to me and logical. And when it's logical, it makes perfect sense. And we therefore we haven't got much to argue about then, by the sound of that.
Not this week.
We're both very much on the same page. Wonder how George is. Hello, George.
Gents, how you doing?
If George is on the same page, we've got a problem. Can it carry that much weight? We'll see.
I missed that part. If I say what?
No, Ash and I seem to be on the same page. We're looking for a bit of dollar strength and therefore indice weakness. I've got one exception to that. I think the S&P short term can rally a little bit. And I'm just saying, if you're on board with that, then we've got a problem, because can it carry so much weight that that it will actually do what we're saying it might?
Well,
where are you placed?
Let me share. I just need a little bit of power to share my screen.
I'm sorry, mate. I keep forgetting I'm in control here, and that's always a dangerous thing. So let me give you ultimate power.
Excellent.
There you go. Actually, I've got an interesting statistic for you when you're
done. For me?
Yeah.
All right, I'm listening.
What chart are you on?
This is S&P 500.
What a great place to start. All right, I'll give you the stat. According to the Monash University, which is one of Melbourne's, Australia's most respected, I would think, universities. They noted
Okay.
that during the last World Cup and previous World Cups, we're talking about football World Cups, right? Or for those of you who don't
Right.
follow the round ball code, soccer World Cups, that the equity markets suffered reduced liquidity during matches, right?
Mm-hmm.
So there were spikes of 22% in liquidity 20 minutes before kickoff of matches. Now, I don't know if that was across all matches or across, and it was, I guess it's dependent on where you are, but that's the stat that came out. It declines the liquidity we're talking about by 29% during matches. So there's obviously 22% going in. There's a lot of people placing their orders. And during the game, 29% less liquidity. So they're watching the footy, not trading. And it increases again at half time. So they check back into their computers at half time and see how their trades are going, I suppose, and act accordingly. So their conclusion to all of that was that the best time to trade or to invest, in their words, was after the games have finished.
Do you know, mate, I find that really interesting. I'm going to just put in a little bit of a caveat, though.
Mm-hmm.
The first caveat that I'm going to put in is the fact that the World Cup this year is at a different time of year than it's ever been before. And liquidity generally in the summer tends to be a bit lighter. So I think if you saw a liquidity spike during the summer, it would be more accentuated. Whereas, you know, in normal trading kind of environment that we've got now, that may not play quite as much as a factor.
I think that's probably their point, though. I think they're suggesting that wait till it's over makes sense because there's going to be volatility, unpredictable volatility. So maybe that's the point. But anyway, I just thought, George, you might be interested in that, and it's going to affect your trading for the next 6 weeks, right?
Well, make barley easy.
Not. I can't hear you, George. Have I muted you, or have you muted yourself?
I muted myself. I always show my weaknesses when you're talking about fundamentals, and this morning was absolutely classic. So I'm taking my daughter to school, and she says, "So we're gonna watch the game tonight?" I said, "What game?" She said, "No, the opening ceremony." I said, "What are you talking?" She's only 11 and she's asking me, she says, "It's a World Cup, so it's starting today." And I'm like, oh my goodness, this is bad parenting at its best, you know.
You know, mate, I think this one snuck up on us a little bit. Because we're sort of like in the summer, you've got a bit more time to enjoy it and relax. But during this sort of time, it's I do think it snuck up on me. I mean, I knew the opening ceremony was going on, but I only started to care about it when the opening ceremony. Usually I get really excited about the World Cup, but I've had no time to get excited this time. So I think you can cut yourself a bit of slack.
Thank you. I mean, I'm driving, I'm saying, listen, just go on your phone and find out which African countries are in. I mean, it was so bad. So I'm not sure if I can collaborate with Monash University. You know, I tried to look at 2018. It's not going to help me much to see what happened.
I had a funny feeling you wouldn't be concerned.
So I'm out of my depths once again with fundamentals, you know.
That makes two of us, buddy.
Yeah. Well, at least the finals I'm going to see, because we staying over. My family have not been in Asia before. So after Bali, we're just going to hang around. After the retreat, we're hanging around for the whole of December, just traveling that place.
Oh, you're taking the family? Awesome.
Yeah.
I'm so sad I'm not there.
Yeah, no, it's a pity. Yeah? My wife and daughter coming up with me, and then my son is at Varsity Portsmouth, so he comes in on the 14th of December for a couple of weeks. So it's going to be a big family bash.
Oh, that's brilliant, mate.
Yeah. But you know, having said that, I think today or the next couple of days is pretty interesting, because one of the things that's key in my trading of the 5 minute, and I've kind of mentioned before, is looking at the daily time frame and seeing where we are in the market. And this 10 EMA is that's a big concern for me. It's a key level of resistance, because that's what I use to kind of look at the strength of the market. So I think whatever is going to take place, there will be some form of reaction there. So I don't know if that's my fight, but that's make that sound. But so there will be, I expect some kind of reaction, and just having these dodgy candles is a bit of a problem, S&P 500, because it simply means I have to be aware of reversals during the day. And you know, it's not, I trade reversals, but I want to trade reversals into some form of a trend, not just multiple reversals creating a dodgy candle on the day. So I'll be very cautious with that. I mean, if I look,
do you know, mate, it's really interesting that you're sort of bringing this up, because what I've sort of sensed from the fundamentals is that there's been an overreaction to some of the dollar news, and therefore an overreaction with some of the indices. You know, the sort of the strength of the buying with some of the indices, and because that overreaction came into play, then I think inevitably we get to a price, and then uncertainty comes in of whether people actually understood the information correctly, and do they actually want to sort of like maybe reverse positions, and then others sort of like thinking, well, if we were right on our initial assumption, then this is going higher. So it seems to create this vacuum, and that's what the fundamentals suggest to me. And I'm the same as you. I was looking at the charts this week and thinking, I just don't really have a comfortable bias about which way we're going for a sustained period this week. I do think the dollar's going to push. That's one thing I feel most comfortable about. I think the dollar's going to push back to the patterns trend line. But when it comes down to many other things, I'm just not so sure. And I don't think there's enough in the way of data this week, which is going to add that much to the clarity.
Yeah, I mean, that makes sense to me. I mean, if you only, you know, I look at a chart and say, well, what's dominant? I mean, that bull candle was pretty dominant. But then you look after that, it's like, well, why are we going sideways? You know?
Yeah.
If the market had been that decisive at that point, I mean, we get here, I mean, we're testing the high of the previous month. And I mean, we're getting a reversal candle, but it's a bear candle. So the bulls can't even control in an opportunity to get a decent enough reversal for everyone to say, oh, hang on a second. So that was a bit of a pullback. There's a little bit more upgoing. So you just have to trade cautiously, especially the lower time frames, because there's always multiple reversals, which are unnecessary stress.
Do you know, mate, when you see the bull candle that you said that was ultimately bearish because it was red, the test there, when you see the next bar come in and there's no follow through, I mean, it attempted it very, very slightly, but there was no follow through, and actually it ended up a bit of a nothing kind of situation. Does that and if let's say that first bar was green, let's say it looked actually very, very positive, does that start to negate the power of the first bar for you if the follow through doesn't come on the next session, or do you still look at it and think actually it's still there?
No, I mean, there's always this big question mark, which says, okay, that was a strong candle, fantastic, I'm looking to go long. But then what happened? Why do we not have the momentum? Automatically, you have to change your mind and be open to a reverse instead of just saying, oh, well, we're going to keep going long. Because if they put a bull candle there, they have to have the follow through. You know, at least give us the follow through and fail somewhere up there, but not fail immediately there. That means you know, the bulls are weak and the bears are strong.
Red flag, isn't it?
It's a big red flag.
So, not necessarily to go short though, is it? It's just a position where we might chop around for a while.
Well, and that's why you always need to have your stop at the correct technical level. So if you are taking this, it's a low probability trade, and you can take it and argue that, well, there is this strength here, and on that strength, what is the key level on this candle that would be a concern, right? Or that everyone would watch. Everyone would look at the 50% pullback. So it's okay, low probability trade, I'm going to take it. best case is to put my stop here, but I can cut back my risk and put my stop. So I'll still measure the stop up to there, but I'll pull it up here, 50%. Because if it comes back and the bulls can't defend 50%, you are out at half of the correct risk. So don't price it for there, because then you compound it. Because you might say, well, might fail, maybe next couple of days, we might still accelerate up. That's how I would look at it. But that's a key level. So you never put your stop there in any case. You got to put it there.
Interesting.
So there is, but then if you back extreme left, that problem comes in for the bulls, right? That's a big problem. They're failing to get at that. And we kind of spoke about that before. I mean, look at this. So talking about 50% here is just, I think we spoke about last week, that big bear candle, 50% of it, that's the level that was tested. So the bears defended that. So if at all you're taking a trade and you're saying, I think we're going to go, you know that the market has to test at least the strength of this breakout by 50%. So put your stop just below that and wait to see whether we get there or not.
Love it.
And then in terms of the decision criteria, then why bother on the 5-minute worrying about this today? You still keep track of it. So I mean,
do you know, I think that's really interesting. So ultimately, and this is the thing about filters, isn't it? The trend filter is defined by so many different ways for so many different people. But what you're effectively saying is that your trend filter is going to be defined by the daily chart and what the daily price action tells you. And then you're going to go down to the 5 to get your entry. And this is something that I say to people a lot, when they're trading the daily, whatever, wave rider or whatever, I always say to them, you're not actually trading the daily chart, you're trading the monthly, but the daily is going to give you the trigger. You shouldn't look at the daily chart for all your information. You've got to go up at least 3 time frames.
Yeah, that's exactly it. I hadn't thought of that because I don't trade higher, but that's if you are trading the monthly and trying to find a better entry on the daily. That's exactly. So you got to understand what's driving those forces at that level. The forces in the market at that level. So where would I pay attention on the daily? On the 5-minute, I'm gonna worry about the extremes of the previous day, because then I'm gonna be looking for failed breakout below that and maybe get a decent reversal to come up, or failed breakout above the high. So all I then just do for today, as far as this market is concerned, is just wait. If it comes down here, then I'm going to see if we get a bounce or a failed breakout. Now we'll have a beautiful daily range that we can trade into. Or if it gets up here, then look to come back in. I mean, I don't want to get chopped up in there. Then, I mean, if you follow the same kind of logic, it's literally exactly the same. Now, the UK 100 is interesting. Just following up on what I'm saying on the S&P 500. Now we've broken beneath the low of yesterday. Now I'm interested to look at failed breakouts. Okay, so there was an attempt to break beneath the low of yesterday, failed breakout. So I'm very interested to see what's going to unfold now. So far, the bulls have kind of repulsed. So I want to see if we can get a double bottom. And if I see a double bottom, then it's a case of high, low, double bottom, whatever the case may be. But if the bears come back and give us a close again beneath the low of yesterday, then the thing reverses, right? I want to see strength of the bears coming back, give us a test and see if I get a lower high. So it gets quite interesting when I get to these levels. That's all that I'm interested.
It's interesting,
pay attention time, isn't it?
Yeah.
I call it pay attention time. Time to look.
Yeah. But what you're talking about are actually quite simple concepts. But I suppose the key is being able to run them with clarity, because there's actually still quite a lot involved in they're simple concepts, but you could run off. You've probably got 10, 20, 30, I don't know kind of how many different potential outcomes that different things that need to happen in this area to give you different outcomes. And that's what it is, being able to go through the different sort of simple concepts. And that's what makes it, that's what gives you the edge with your experience, because you can just like run down, hasn't done that, but it could still do this, hasn't done that, but it could still do this. And then, you can understand each and every one of them as they come. But the actual, what you're saying is very similar to you in a way, isn't it, Jeff? You're looking at that false breakout and maybe looking for a slightly different message.
George and I cross over quite a lot in terms of the patterns that the price action actually give you. Yeah, crossover a lot.
Yeah. Interesting, mate. So without that double bottom, this isn't something that you'd want to buy anyway. You've got to see that.
I've got to see that. I have to see that. So I have to see the double bottom. Then I have to see the acceleration of the double bottom. So in other words, I have to see the bulls taking advantage of the double bottom. Then I say, okay, fantastic. Bulls are in control. Let's just wait for the higher low.
Yeah. And that gap's a target, would you say?
Well, if it sets up here, so there's two options. Now, I kind of say to the guys, if you're going to be away from the market, right, then set your target at a technical level just below that, and say, okay, I'll take it there. But if you're gonna be here, don't put a take profit in. Wait to see even if you get a bit of a pullback. You might still get a bit more up. So that would be an initial target to take initial profits. But if you can get more out of the market, just hang in there and take a little bit more.
Yeah, I like that. I mean, that gap is posing a problem for me to go short. I mean, that's when I did actually take a short, as I was saying to Jeff earlier. I took a short, and then I started. Then I looked again, and I saw that gap, and I was like, don't know if I want to go short before I see that gap closed, really. So I closed the position, and subsequently we have moved down, but that gap's a concern for me. I just think that needs to be closed up before we really start to go lower, if that's the direction of travel.
Yeah, I mean, if for me to look for shorts back up here is the inverse of everything, right? I need to see whether we go with a bit of a wedge, or we get a double top high of today. And once I see that firm structure, double top or wedge top, then I want to see acceleration of it and look for my lower highs, etc. So that pattern is the very first thing you're going to see, and then off it. So I don't trade just a double top. I have to see the lower high by looking at the strength after that. Talking about gaps, just quickly, if you ever look at what we have on Hang Seng 50, I mean, that kind of fits into what you're talking about. I'm looking to go short. I mean, there was this big gap down here, but there's no ways I'm going to go short here. What I want to see is a test of the low of yesterday, which effectively closes that gap to a great extent. And I mean, that lower high double top, be that is fantastic. But I want to see what we get up here. Hopefully some form of another, test, which might give us a third push or some kind of variation. But I'm definitely looking to go short, but I'm not going short down here. If I was pressed to take a short, I mean, I would have to put a wide stop, right? If you just say, George, you have to sell, or then I have to put a stop up here. I mean, that's a huge stop. And for me, it's key. When you get these breakouts, weak or not, of low of yesterday or high of yesterday, then the test of it is going to be key to take a trade. So I mean, euro went away, coming off that to the 10 EMA, but where else can I trade here? It's pretty difficult for me to jump into a trade now. We've got this bear channel, but if I take any trade, I've got to look to the left. Where am I going to put my stop? Am I come to put a stop here? I would rather not, because there's still that test. So it might carry on selling off. And I think you were saying earlier on, once you've missed it, you've missed it. If for any reason we break above this channel and try and test that, that's fantastic, because I know most breakouts of a channel tend to fail. So that would be fantastic. And then we sell again.
Yeah, do you know, I quite like the ability to be able to talk yourself out of a trade. You know, I quite like the power of that ability, because if even if it goes, you know, it would have gone your way, because actually the way to keep your psychology in check is by accepting that firstly you're not going to get every single trade that's available, but secondly that it's much more interesting to become like a sniper, waiting patiently for the one that you really, really like, and seeing if you can kind of get those ones. Not you know, I mean it's great to get every move if you can get it, of course, but I just think it shows a degree of discipline, just to kind of go, well, no, actually it doesn't matter, because what I'm after is the really kind of ripe fruits before I'm going to try and, you know, throw my hand in and put my money to work. So I don't mind missing it, really. I don't, you know, and also with Bali just a few days away, that's playing a factor for me. You know, I know I'm traveling. I don't want to get caught in something that actually I'm going to be caught in for the next 4 days. I want to be able to have a clean slate when I'm there. And that's, you know, it's another factor. It does sort of play a part, really, for me.
Yeah. You know, one thing that helps me with talking myself out of trades, because I create all these PowerPoint charts of best price action setups. So I'm always saying to myself, is this something that you would coach someone on?
Yeah.
And no, definitely, I wouldn't. I mean, then moment I say I wouldn't, I have to not take the trade, because if I do, I'm gambling. There's no way I'm going to teach someone to take a trade yet. You know, so if it doesn't,
another way. Sorry, George.
Yeah, Karen.
There's another way, and I tell everyone from the outset when I'm trying to teach them my system, and it's, you must have a cheat sheet when you're trying to learn a system or even price action.
Yeah.
You've got to have a checklist, right? And even if it's pinned to your monitor that says, okay, have I got a candle pattern? Have I got a directional bias? Have I got a fundamental issue? Have I got this? Tick, 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 tick. And if there's more crosses than ticks, you don't take the trade.
Right.
Yeah, I think that's true, mate. You know what I mean? There's two things that you guys have probably said in the last few weeks that I have to say are quite rudimentary in many respects, that I don't do. I don't have a checklist anywhere near me.
Nor do I, because the checklist is up here now, right?
The checklist isn't there. That's fair. Yeah, that's fair. But I still quite like it. I quite like the thought of having something written down. I quite like that as well, you know. Because I have to say, when I went away in August, I came back and I was a bit cloudy. It took me a while to get up and running again, and a simple checklist would have probably fixed that.
Yep, it does happen.
No, my PowerPoint charts are my checklist.
Yeah, you've got one.
Because I'm looking at that every day. I'm saying, okay, there it is. If it's not there, and the number of times that I say to myself, you should not have taken that trade. It doesn't fit into anything.
Yeah.
You know, so I've got to remind myself, you can't take the trade. And one of the reasons I came up with starting off with 0.25, whereas after many years I've been starting off at full risk, was because I knew that sometimes I convince myself it's there and it's not.
Yes.
You know, so I can put a 0.25% risk, and if I sit there and it's a mistake, it's not an expensive mistake, still a mistake, and it's, you know. But once I say, okay, it's fine, then I'm very, very quick to scale in, you know, because now it's going now.
Yeah, do you know? I mean, I'm interested in that stuff, mate. When's your course in Bali?
I'm doing something, I think, on the first day. I'll look at the schedule again. I've got a couple of slots also that I'm doing. Yeah.
Okay. Yeah. I mean, you know, we'll hopefully have some time to sit down together as well. So I'm interested in your money management because it's very different to mine. But I've already kind of, as I say, there's some things that Jeff says that I've kind of, you know, borrowed from the way his approach over the last 2 years, and there's things that you've done as well that I haven't. That would be something else that I'll be interested in testing, whether it's it would actually give me better returns to have a slightly different money management. So yeah, I'll see if I can steal your ear for an hour or two when we're in Bali.
Oh, no,
I'll back George's has been better than mine.
I thought you were going to say better than yours, and I was going to say you're probably right.
Than mine, I'm hopeless.
Yeah.
Yeah, I think mine has come through a lot of fire and been burned. That's why I've had to refine it.
I think it's great, mate.
Absolutely everything in life you learn from your worst mistakes.
Well, and from your peers.
Don't want to make them again.
And from your peers, and that's what I really like about this. This is what we always say. About this stuff. Trading Buddies is brilliant, really, just for these little gems that come in. Because even though it's a show for the guys in the room as well, I guess you guys are sensing that we're all willing and open to kind of learn new approaches as well, and give them to each other and borrow what somebody else is doing. So it's fantastic, really. It really is a special room. I don't know if that'll ever change. I don't know, but maybe when we're all basically trading the same thing, because we're all borrowing a little bit here and a little bit there. I don't know.
But that's okay, because the more money that goes on the one direction, the more chance we've got of going in that direction, right?
Yeah, very
true. I used to think, and this is kind of part of my presentation at online in Bali. Having an edge is something, I guess, that when you actually find one, is something that you don't want to give up, because you think, oh, I've got to keep that under my belt, because if anyone else finds out, then I'm going to lose the edge, and it's going to be taken away from me. Or nothing could be further than the truth. The more people that know, the better.
Yeah.
At the end of the day.
Yeah, I agree. I totally agree. Yeah, because obviously, if there's more people that are buying when you're buying, it's going to push the price up.
Yeah. Common sense, right?
And Ash, the one thing you must just put your mind around. So there are the 4 markets that I'm trading. I've heard you talk about the hedge, taking hedge trades.
Yeah.
And I have tried. I must confess, I've tried taking hedge trades, but I just find them stressful, because I'm only hedging on the same market.
Yes.
So then I'm sitting there and I'm saying, oh my goodness, it's kind of balanced. Now I must just close this thing. Which one do I close first? Kind of stuff.
Same with me, George. I've tried it. Oh, thanks, Ash, you bastard.
I need to know what I'm going to talk about the hedge in Bali, but I will, when we sit down, George, I'll go into as much detail, because I've only got an hour to talk about it in Bali. But the spread trade, effectively, because that's the best hedge. You can hedge your own the same thing that you're trading, which is great, and that works. But again, that's different money management to what you're doing, so it wouldn't fit with what you're doing with the money management. But the best hedge is really when you pick markets that are correlated but move differently. And I will go into that in a bit of detail, but I'll share that with you as well about the ones that I choose.
Yeah, I mean, I think that's probably the one bit that would stumble me. That would mean adding more markets to what I look at, and I just can process more. Because in the end, I don't know, I must have tried maybe 10 plus trades. And I said, listen, but it's better just to get stopped out at 0.25 if you want.
Do you know where it works? It works really well for stocks. That's where it works the best. Because with stocks, firstly, you've got a broader kind of option to trade from. But where it's really nice with stocks is that you can say, I mean, for the UK as an example, with interest rates going higher, it would tend to affect the housing market. So straight away, I'm like, okay, well, I've got a hedge short on a housing stock, and it could affect something like gold and silver positively. Okay, well, I've got maybe a hedge on a mining stock, particularly if they think China's opening up, copper's going to do well, silver's going to do well. So there's a few companies in the UK that I think would outperform, and it's not whether they go up and they go are down. They could both go slightly sideways, but as long as the one that is the long is doing better on percentage terms, then I'm making money. But the thing with it is that what was going to be my point with that? Oh yeah, what you are hedging is market overall index risk. So if the index comes down, they both may fall, but because the interest rate is the thing that's probably the biggest driver for it pulling down, it will probably affect the building stock more than it will the mining stock. So that's why you make money, because the one coming down will come down more than the other. So that's where it's better with stocks. And you can cross country that. You could pick two electrical stocks. If you know that there's bottlenecks in the supply chain of chip makers, you could go cross country, one chip company in the UK versus one in America, depending on which you think is going to be more or less affected. So it's really useful for that, because your options are vast. When it comes to MT4, the options aren't quite as apparent. There's probably only a handful, really. I won't give it a number, but it's probably a handful, because most of the stuff's already got the spread. Euro dollar, there's a spread trade there already created. You can't trade one against the other. You're already doing that. So if you go euro dollar, but I'll tell you what, I'll go euro dollar long, but I'll go euro pound short. The pound's in the mix, so you've compounded the complications. You're not just going one against the other. Yeah, so you're better off
potentially a completely different dynamic depending on what news is around the place, what fundamentals are around the place. So yes,
I've thought about, could you hedge currency pairs, but you can't really. Well, not that I can find anyway. You're better off sort of picking, single entities, and there's just not that many on MT4.
Sure.
All right, guys. Sorry, George, if there's more, that's fine.
No. I was saying it's a marvelous insight into how complex your brain can process fundamentals. It's too many things.
Well, yes.
Whether to make a decision.
Yeah.
It's easy, George. You just ask Ash on Monday.
Oh,
we'll talk it through, mate.
You don't have to worry about it. It's simple as that. I've got one thing to add before we go. Anyone else?
No, mate. I think that's it for me. The FTSE is it's pretty static. It's pushed down a little bit. It's pretty static, and I think that might be the day. So I'm done with that.
Okay, cool. George, you're done?
I'm done. All good.
All right, mate. Happy days. Interesting that we're talking about, and have been pretty much all show, about where we think the US dollar sits at the moment and where it's going for the upcoming week. And I think it's a buy. I've got no qualms about saying that. What I have got in front of me, however, is for the last 4-hour chart, on the 4-hour chart, 1, 2, 3, 4, 5, 6 candles that are going south in a hurry on euro versus the dollar. Now, I often say, and I say it because it's the thing, that when price reverses off a level, it often will ignore the daily pivot. Yet, I find myself always looking on euro dollar because of the numbers or the probability factor. When we get a long way away from the daily pivot, that it would tend to go back towards it. Even if it doesn't test it, it tends to go back towards it. So on that basis, we are now 100 pips, let's say 100 pips away from the daily pivot. Average true range on the euro dollar at the moment. Let me have a look at that. Let's go with 20 days. So month's worth is currently 13. That can't be right. 134 can't be right either. What am I missing here? Average true range. It's telling me 13 pips. That can't be right.
130, maybe?
No, that can't be the case either. Let me have a look. There's 20. Oh no, hang on. That's the daily chart. Going from 103, 102. Okay. Maybe it is. It is 134. Okay. That's interesting. I didn't think it was out to that far. All right, that changes things a little bit from what I was about to say. And what I was about to say was we are at or over the average true range, but we're not. So we've got a little bit to go. Let me see if there's a level down there somewhere. So 132 pips from there takes us to about there. It's not a strong level, but okay, I'll go with it. It's DS3, I've got to say. So if we got to there, I certainly wouldn't be looking to sell it. And if I did get a reversal pattern from any time now on, one of George's double bottoms or a bullish engulfing or something like that, followed by a higher low, then I think there is a trade back towards the daily pivot. May not get there, as I said, it may get stopped at around about there somewhere, but that could still be a decent trade on euro versus the dollar. So that's actually I am up for a little while. I'll be doing my presentation thing, so I'll keep my eye on that. That's where I'm at with euro versus the dollar. Pound didn't trigger, so we're still in this tight range on the pound, looking for that long back up towards the pivots, but nothing yet. So that's me.
Cool, mate.
Looking for euro dollar long if it sets up.
Good stuff. Okay, mate. Well, it's quite light on news data today, so maybe no major drivers.
And no show on Thursday.
Yeah. And
no show next Monday or next Thursday. So we're back on the, is it the 8th?
Yes, I believe so.
Could that be right?
Or the 4th?
Hang on. I'll just double check that.
5th.
So George, you got that memo, mate, didn't you?
Sorry, mate.
That there's no show next week because of obviously because of there's no show Thursday. So we're actually back on the 5th of December.
Yeah, sounds good.
Yeah,
that's perfect.
All right, you guys, enjoy Bali.
Thank you, mate. We'll be missed.
I can't be with you, but I will be with you in spirit and obviously online. Those of you who won't be seeing us for the next 10 days or so, whatever it is, thanks for your company and for being our trading buddies. As always, we look forward to seeing you back here on Monday the 5th and have a wonderful time in between. George, you be very, very good in Bali, right?
I have regulations traveling with me, so I'll be fine.
I know. All right, guys. We'll catch you later. Have a wonderful 10 days ahead. Bye-bye for now. See ya.
Bye, guys.